Today on the Income Flip podcast, I have my friend Stella Han with us from Fractional. Stella, welcome to the Income Flip podcast.
Thanks, Rob. Excited to be here.
Hey, I have been waiting for this because I want to unpack your story. What you've built with Fractional is awesome. But before we get into that, right, because we're going to talk a lot about that, I want to learn more about, Stella and how she became an entrepreneur and like how all of this evolved to what you're doing today with Fractional. So let's go back in time. Tell me a little bit about yourself.
Yeah, well, I grew up in the San Francisco Bay Area, still here right now. It's nice to, not experience weather. But I think, just being born and raised in this startup ecosystem, it, planted a seed in me in terms of how I thought about technology, creating my own future and making a dent in the world. I'm a software engineer by trade, so studied computer science, and actually my parents did the same thing. They're software engineers as well, but they flipped houses as I was growing up, and I was the cheap family labor. Spent a lot of my weekends covering my nose and painting over the flips and watching over contractors. But it was, I think, incredibly humbling and empowering to see my parents create a destiny for themselves, right? And I really feel like that planted a seed in me where I thought about how much of a difference it makes in your life when you can take control of your own future and build something that is so impactful and gives you meaning to your life, and also inspire your kids to do the same thing. So career-wise, ended up being a software engineer as well, and the moment I started making money, it made me think, how do I go get my own side hustle? How do I build my own portfolio? And naturally, real estate was something that I was really curious about. However, it takes $1 million to buy a shack out here in the Bay Area, and that's not the kind of money that you have as a new grad. So I'm like, well, let me, be creative, right? How do I buy something else that's not necessarily in California, but would still be a really great, stepping stone, right, to getting there eventually. So started looking at out-of-state investing, and Atlanta was a market that really piqued my curiosity because, one, the price point is a lot more affordable, and two, there was a lot of tech companies going out there starting offices and all of that. And I'm like, okay, well, I'm in tech, I get tech. That's a signal that makes a lot of sense for me that I can follow. So started, just going after the basics, single family homes, one at a time out there, and grew that side while I was still working my software engineering job. And I think, the higher spirits, right? When you do things methodically, things really start coming together. And I had that moment really when I wanted to go bigger in the real estate game and not just do single family homes anymore. And at one point, I found myself, looking at this portfolio of 22 duplexes where the underwriting was amazing. It was in, a market that I really loved. And I'm like, man, I want to go get this. This is the next level that, I'm now aspiring to achieve. But the issue was, I needed to get $1 million for the down payment plus closing costs and reserves. And, I look at my bank account and I'm like, ooh, I don't got that kind of money, right? So what are my options? I've been hearing people talk about raising money, using other people's money. So I thought, well, that's got to be the way to go do that. And I'll happy to unpack that, but it was not a great experience. I ended up losing 55 grand my first time raising capital.
How old were you?
I was 22 at that time.
Oh,
Yeah, not
painful.
fun. Extremely painful. Paid a securities attorney a shit ton of money, and ended up finding out that I couldn't raise from my family and friends because they weren't accredited investors. But I didn't know any better, and I had already, paid my earnest money deposit to lock down that deal. Couldn't raise
Okay.
$1 million in time, so lost my EMD and the 35 grand that I paid the securities attorney. So that was an absolute shit show.
Oh
And
man.
Yeah, not fun, but it ended up, inspiring me to create Fractional. So failures lead to success.
Stella, I love that, and we're gonna unpack that, and it's so true, right? The only way to fail is if you just stop thinking about like how do you actually solve this problem, right? There's always a solution to it, and you come with an outcome. But I wanna understand you at 22. You decide you're gonna swing for the fences, and you're gonna buy a portfolio of 22 homes, right? Duplexes, and you're gonna raise all the capital. Like, where did that come from? Was that your parent? Like, I get the sense that maybe that wasn't your parents. Maybe they were more conservative. That does not seem like a conservative thing to do, right? At 22.
Yeah, I mean, I think it is definitely ingrained in me where I know that only by taking action can you go somewhere, right? I am someone that loves to fail forward.
Hmm.
So when I saw the opportunity, I'm like, well, if I sit around and wait, that portfolio will never be mine and I will never achieve my goals. So I want to go do this thing. Let me just commit to saying I'm going to go buy it and I'm going to figure out how to buy it. And even though it didn't work out, I learned a lot and I definitely failed forward from that. So many learning lessons. I, got to understand what a security even means in the capital raising world and what a syndication is and what a fund is. And also got to compare that with, other forms of investing that I was doing in stocks and crypto and startups, right? And just how the worlds are so different and decided that because I've experienced all these different vehicles of investing and failed and succeeded, right? It's all of that that gave me new information, new data to go create my own wonders with it too.
Yeah, I I think it's also maybe in the DNA of the market that you're in. It's like, hey, like we're just going to fail forward. We're going to continue building things until we figure this out. How did you end up at Y Combinator?
Yeah, well, so after that, complete fall on my face moment with the raise for the duplexes, I actually felt really horrible. Like I felt like a big fucking failure for the longest time where I thought, maybe I don't get to go after these bigger deals and I should just
Mm,
stick, with single family homes. So I do think, there is value in sitting in your failure and letting that sink in to then really bounce back from that stronger than ever. So after a while, I mean, as an entrepreneur, it's very hard to take no for an answer, right? And that was really what set that fire in me where I'm like, this cannot be it. Like this cannot be the way that people raise money and the only way people do things in real estate. So then I started really thinking outside of the box again and thinking, well, I've been doing stocks and crypto and startup investing with my friends and we would pour our money together without having to go find a securities attorney and deal with all of the red tape and headache. And every week, we'd look at how our portfolio is doing, we'd make decisions together, and
mm,
we vote on how we wanted to deploy our capital into the next deals. And it made me realize, there's this alternative structure called an investment club, which we were already doing, but just not in real estate. And people never told me about that because no one in real estate knows about what investment clubs are, right? Like they told me you have to do a syndication or a fund, but that's
mhm.
actually not the case because this investment club structure exists outside of the real estate world and I've been using it and it's worked, great for building my portfolio in that different vehicle. So I was like, well, it's time to take action again, right? When you have that contrarian insight, it's like, I'm going to create my own destiny here. Why don't I create a company that helps real estate operators create investment clubs? Because people don't even realize that this thing exists. So that gave me the idea of creating Fractional and Y Combinator is, the world's number one incubator and accelerator when it comes to really helping founders with the next big thing take off. And again, going back to like making really methodical and calculated moves, I'm like, well, I have this idea now. I really think it's going to work. how do I actually make this a legit real thing? So I applied at Y Combinator. My partners grilled the shit out of me during the interviews, but they were like, yeah, you experience all sides of the story. You're the perfect person to go build it. So they actually gave us our first investment as VCs to help us really kick off this journey.
How cool is that? Right? That's cool. That's gotta that I love watching on YouTube all like the Y Combinator podcast stories, like YouTube channel, like just it's fascinating to me. It's such a cool culture like out there. Um, Stella, let's go back a little bit and explore something. When did you start investing in clubs outside of what you're doing with fractional? Like at what age and how did you come about it? And like I let's unpack that a little bit.
Yeah, so in college already, I just, growing up, right, watching what my parents were doing, knowing that being financially savvy was something that was always really important to me. Like
Okay.
I realized from the get-go, you cannot just have your W-2 job and grind your life away and not do anything else. Like that does not create meaning to you as a person. It does not create meaning to you for your family. And you're always just, a cog in the machine, right? Like
Yeah.
that doesn't give you a purpose in life. And seeing my family, my parents do that outside of their job and how much that motivated them and gave them light and color in their life, right? That was
Hmm.
really, really meaningful to me. So when I was studying computer science in college, my mindset was already, I'm not just gonna focus on getting good grades, getting a job. Like that's obviously necessary, but it's important to think outside of that. So I had joined the entrepreneurship club in college. I was hanging out with people that were starting their own businesses as undergrads already, right? And we would then look into investing in startups, investing in stocks, what are the other alternative asset classes out there. So it was very early on. And I think planting that seed and continuing to experiment with all those things, it just made me a lot sharper in noticing what are the really intricate changes that are happening in the industry as a whole.
Yeah, I love that seed planting that happens around that time with like friends or you're in college and you guys are looking to build something and you see stories of people that have built stuff. It's interesting because I've always thought of grid because I've had so many people through grid through the years like come in with zero experience and then like build massive portfolios and I'm like, we're like an incubator for a lot of these people. We've just got to figure out a way to partner with them along the way, which, fractional is one of those ways to do it. We were always doing deals with people. We would always lend them some of our capital as private lenders, or we'd borrow money from them, to do our own projects. But this, what you've built, sets us free a little bit to be creative around it. And it's not just well, I'm going to let you go into fractional here in a bit, but it's not just around real estate. Like you start thinking like, well, we can actually raise capital to expand grid or to grow another business or do something, right? Besides just the vanilla portfolio of properties. So let's go back a little bit further. You get your first seed money to build fractional. And what were some of the challenges there as you guys were building the business initially?
Yeah, well, things started out that it was an absolute banger. So when we got our investment from Y Combinator, it was really just an idea at that point. I had wanted to make sure that there was product market fit and we were going to build something that people would love. So initially, before even building a full fleshed out product, we had built this fake landing page just describing like, who's interested in pooling money together with like-minded individuals, have an expert that would, guide your club through the experience and go buy real estate together. And we posted that in a bunch of different forums with a lot of busy professionals. And just from that, 2,000 people signed up on a wait list for this non-existent product.
Yeah,
Yeah, so
that's
that's when
awesome.
we were like, okay, we are 100% onto something. Now we just need to build it. So early on, it was a lot of just pivoting really quickly, getting as much information as possible. We would build something really quick, get feedback on it, see what people loved, didn't love, and then take that and just keep implementing and that speed. And I almost felt like, I was in the pressure cooker of trying to figure out things as quickly as possible. Mm-hmm. That was really, really impactful, where it's like I almost had to shed that perfectionist in me of not having to spend so much time trying to get the most perfect thing out there before sharing it to the world. It's like, let's build in public. Let's do as much as we can in public. That way we get, new feedback, new
real-time
issues,
feedback,
new problems. Yeah. Exactly. Like every single day we're landing and onto the next thing, failing forward. And that was successful, but it was painful to go through that at the same time, right? Because it's such a different mindset and way of working than I was used to, than who I am as a person. I almost felt like I had to shed the new me and develop a new version of myself through that process. So that was really, really fascinating.
Yeah, actually, I want to explore that identity shift, because that's what that is. It's an identity shift, right? Like, was it the feedback that you were getting that you were like, ooh, that's painful, that it's not perfect, right? Like, what was the pain? Did you feel exposed? Did you feel like, what were the feelings that you had when you were going through that?
Yeah, I would say early on, whenever I got negative feedback, it almost felt like a personal attack.
Yeah.
And I had to really figure out how to break away from that. And when you are a perfectionist and you spend so much time to build your idea of the perfect thing, and then you bring it out there and people trash on it, or they give you feedback, it really, really hurt. And I had to realize, when people are telling me no, or telling me that they don't like something, that's actually a good thing, and they're speaking factually about their opinion around what we're building and not me as a person. Having to realize disconnect
they're
made
different.
a really big difference. Yep. And then also then it made me realize it was so inefficient to get to the perfect thing that I thought, because that is not the truth. Like, that is my very subjective view of something, and now I'm wasting so much time and energy and getting all personally attached to something, instead of just like sharing whatever I'm building the day of and getting raw feedback on it, and viewing that as a perfect separate thing than who I am. That made me actually feel more productive, where it's like, okay, I'm just building really quickly, I'm getting feedback quickly, and I'm going to make this better, instead of really being personally attached to the process and the results.
What's so interesting, obviously I've spent my life on the sales side of the world, sales and marketing. And that's the same experience that people that are starting to sell something for the first time, and they get rejected and they feel personally attacked, and they feel like they're somehow their identity is tied to the no. And I'm like, listen, they're not rejecting you as a human. They don't even know you, right? It's that thing that you offered was not something that they wanted. And you just like next, and you refine the pitch or the conversation, and you've got to separate yourself and start adopting a different identity of like fire ready aim, like a little bit, in order to, the only way to build something is to iterate quickly, right? Another way to say it is what you've said. You've got to fail fast in that process, both on the sales side, and it sounds like on the development side, right? Iterate until you find, okay, this is what people actually want, right? This is what they want. Just out of curiosity, what were like some of those things? Because I see what it is today. Like, what were some of those things that in your mind was like, I know people are going to want this, and then they just don't want it?
Yeah, well, the first one was, we initially had this idea about building a marketplace where, random people would come to the platform, and then they'd make these crazy connections with other people on the platform, and then like form their own little hub, and then go find properties and do it together, which sounds really nice in theory, right? But then in practice, we realized it was really difficult for folks to build trust with complete randos. And democracy without any sort of organization is very difficult to run in practice. Like you cannot have a group of 20 strangers, all of them are, in a flatline organization in a club. No one has like a leadership role to actually take real actionable steps and execute and go find the properties, get the deal flow, underwrite, all of those things, right? Like it does take structure to do that properly. And yeah, like that was a big, blow up in our face kind of moment where we realized like, yeah, some things sound really nice in theory, but in practice, like it makes sense, right? And it was almost like a hindsight 2020 moment, because you then realize, yes, like that's how companies are built. That's how teams are built. Like there is someone with the vision, with the leadership. Yes, you can still involve a team who believe in the same thing. Everyone takes their own roles and responsibilities, right? But to have that person essentially create structure and herd the cats in their own way, right? Like that's how investment clubs are able to move efficiently and actually be productive. And that's when we've even had a shift in our business model on, okay, let's not just create this broad community open marketplace and hope for the best. Like that's not going to work. We actually need to find the people that are the visionaries, that are the leaders, that have their own network of people that know, like, and trust them and want to become business partners with them. That's who we should be focusing on. And then as a product, obviously serve their entire network of people so that they can do deals together.
Yeah, empower them with a tool that helps them bring that influence and that trust to life, right?
Exactly.
Very cool. How long did it take you to make that shift in the model?
It honestly took over a year to do
Yeah.
that. Yeah.
Yeah, because you've got this idea and it takes a while before you decide to kill the baby.
Exactly.
Like,
And it's like the worst is when it's kind of working, so then you're just
yes.
not sure. It's almost like the same as, letting go of someone on your team, right? Where it's like, it's kind of working, but it's not really working. Should I give it another chance? Maybe I just haven't poured enough love into it yet, right?
Yeah.
So yeah, a lot of this similar, tendencies, I feel like, where I had to make a lot of shifts in my leadership style and my decision-making process.
Well, let's talk a little bit about that, and then we're going to break. We'll cover fractional and all the different facets of it. But how have you grown as a leader?
That's a great question. We started the company with just me and my co-founder. And, we saw ourselves really as independent contributors when it's just the two of us, right? Like there's so much stuff going on. We're building all the time. And then from that, we grew into a small team where it was, 5 of us. And what was really nice was initially we brought in our past coworkers at a firm. So Carlos, who's my co-founder, we were teammates at a firm. And then our initial founding team of employees, they were also our past colleagues and friends at a firm. So that gave us a leg up in terms of just really understanding how everyone works. We already had the rapport, and that was great. I really think a major shift in leadership style happened when I started bringing in people that did not come from my world before, right? And really understanding, how do you delegate? How do you empower people? How do you also make them see the bigger picture and pull them out of just the day-to-day grind and the IC role and understand the big thing that we're really building towards? That was a very different shift in how I communicated than who I was when I was an IC, where I feel like, it was also really meaningful when I got myself an executive coach, because I noticed that I'm someone that learns through example and through doing. So when I saw my exec coach me, I noticed, wow, like these are the major points and gaps in how I'm communicating and how I'm learning things. And then I noticed that my employees, like, they follow me and how they go about their strategy and their day-to-day. So then it's almost like passing my learning lessons to them so that they also see what's missing in their roles to then go bigger than, what they're doing just as an IC.
What's interesting is as you, for anybody listening right now that's building a business, first you've got to build something that maybe the market wants, or you've created a service that the market wants, and then it poses a new problem. And we describe this in our 7 levels of freedom framework, like when we are coaching entrepreneurs through these different levels. And one of the levels is, okay, you now have to go from this doer to an actual leader, and there's an identity shift that happens there. Not everybody can make that shift. Like they're just, I don't know, for whatever reason, they don't want to play that role. But as the founder of the business, you have to be able to play that role. And it is a shift again in how you think about yourself and how you show up for your team and how you coach your team. And I often say that the business that you're building often works on you more than you work on it, because it changes you and develops you as a person. And I'm hearing that, right? Like and by the way, you're going to have a long career, and that will continue to evolve, right? Your business will always just be, at the lid of whatever your leadership lid is. Like, that's the truth. John Maxwell talked about that, right? The law of the lid. And so one of the realizations I had to have as I was building and building different business units was, this business is constrained by my ability to build my leadership lid. So you've got to get a coach. You've got to up your game. You've got to put yourself in rooms with other people that are doing things at a different frequency, at a different level, at a different energy than you, in order to build the vision that you have, to fulfill what you want to fulfill, right? As an entrepreneur. Where it'll just die, right? It'll just die. So another way to say it is, you constantly have to be growing, and you got to make your world big enough to be able to fit the world and the other people in your world in that vision that you have. So let's talk about Fractional real fast. How many clubs now have you helped establish with Fractional?
We've helped operators establish a few thousand clubs already, and people have raised over $400 million through the model.
That's unbelievable. That's awesome. I would say that you're now a club expert. You've probably seen clubs that are successful and other clubs that fail. Like, tell me a little bit about some of the patterns that you see when people are launching clubs. There's probably somebody in here saying, hey, I want to launch a club, right? So what advice would you give to that person about do's and don'ts?
Yeah, the really fascinating parallel that I see with capital raising and doing investment clubs is that it's actually very similar to doing sales. A lot of times people think about capital raising as a very intimidating process, or they're not really sure what to do. And I think when you dumb it down, like, it is effectively doing sales, right? Like, you need to have people build rapport with you. They need to trust you as essentially the product, right? Yeah. And really sell the vision and the story of why something is impactful. So breaking that down, capital raising starts with top of funnel, right? I see the most successful operators and club leaders being people who have really built an online brand or built a community, or are just constantly out there sharing about what they're doing, right? Because then you're really gathering an audience, whether it's family, friends, colleagues, just whoever is watching you, right? They're following your journey and really seeing how you work as an operator. And that top of funnel, then when you're ready to actually raise capital, right? Then that goes into the middle of the funnel, where now you can go to them and say, hey, you've been watching me this whole time. I actually found an opportunity. I have a buy box that I want you guys to be a part of. Come to my webinar, or let's grab coffee. Let's have a quick 15-minute conversation and talk it out about what working together looks like, right? So that being able to then, talk really precisely about a specific opportunity and tie that with the investor's goals, right? Like, what does your investor want to do? Are they trying to retire? Do they have tax problems, right? So then really building that emotional connection and pinpointing that to the individual investor for why you're the perfect person and why this is the perfect project for them. That's where you really, nail it in, right? And then at the end, being really resourceful in whether it's, legal structures, right? Knowing the investment club structure, being able to take in unaccredited investors, knowing how self-directed IRAs work, right? Maybe someone doesn't have liquid cash, but they've got an old 401k that's not really doing any work for them. Well, if you're a resourceful operator, you can actually help them convert that into a self-directed IRA and use that to invest with you, right? So then it's like, because you know all these different tools, you can use those to your advantage to really seal the deal and have the close. So that's really where, the three ways, right, in every step of the funnel that we've seen capital raisers who really crush it, they really excel in all three of those areas.
Yeah, they're building trust. They've got a consistent brand and message that they've put out to the marketplace. They've got a good thesis, right? They can sell the vision of that thesis, and they can then tie it to somebody's needs, right? Depending on like where they are, like you said, depending on probably like age, circumstance, will determine which club they can enter into. Because what's really cool about this is that you can have multiple clubs, right? I know that you work with some high profile people out there like Pace and Brandon, and they all have multiple clubs, which is really cool. Like, it sounds like Pace is almost starting a new club every month, it looks like.
Yeah, he's got so much deal flow and so many investors. Like, everyone is lined up to partner with him, right? Like, Pace has really cracked the code when it comes to storytelling and making people want to be a part of his experience and partner with him, right? Which then goes back to the whole, building your brand.
Yeah, the brand.
Your story.
Yeah.
Yep.
Yeah, so powerful, right? It's got a good brand, a good story, a good message, and then that trust gets transferred, and then you've got to execute in order to stay alive for, a long period of time. Because then, oh God, what's the name of that one guy that just he was like that internet influencer that raised all that money for like Bed Bath and Beyond, all those brands that like older brands that got foreclosed on. He wanted to bring them online. Oh,
Wall Street Bets.
oh, who was it? Anyhow, long story short, he raised $170 million, but he had never done it at scale like that before and couldn't execute. And yeah, not good. What I like about somebody like Pace and somebody like Brandon, like people that I know, they've just been operators a long time. And it's when you see somebody that's been an operator for 20 plus years and they've got the track record and the scars and the stories, then you can feel good. Because I always worry about people that, just they get an idea to maybe start something, syndicate a project for the first time. Everybody's got to do their first one, right? And then it just implodes, right? I've had friends go into DC doing development work, raising millions of dollars, and it was just too big for them, right? And so if you're, I guess there's an important piece, right? If somebody is a member of a club or a community, what are some of the things that they should look out for when they're deciding to make an investment in one of the clubs?
Yeah, that's a great question. So let me unpack that in a few different ways.
Yeah.
So one, the great thing about a club is that you're not going to be a passive investor. And that's also why, from a compliance perspective, a club can take money from both accredited and unaccredited investors, because everyone actually has a seat at the table to make decisions on how the investment club chooses what deals they deploy its capital on. Whenever there's any sort of changes to the business plan, your voice counts. You get to share your opinion on what you think makes sense and what the club should or shouldn't do. So with that, it does give you more control to, one, hopefully make powerful decisions that will lead your club to successes. But two, I think it's important to talk about the ugly, right? Like, when things don't pan out, you've made all the decisions at, up to that point. You understand what decisions got the club and the portfolio to that state. which will then give you the insights to work as a team with other operators to try to turn that deal around or to exit it without, losing a ton of money, right? Just figure a way out that makes the most financial sense. And, I've been in real estate long enough where definitely not every deal goes well and not every club goes well, right? Like I'm personally actually in a club right now where originally we wanted our properties to be co-living, and the idea was, we were gonna build, 7 rooms in this one single family home, and that's gonna help us cash flow and all those things, and only to find out later, like, it's a lot of headache, and the tenant quality is a little bit sketch compared to just dealing with one tenant in that, right? And I'm really grateful that we're navigating this scenario where there's 15 other people in my club where we can bounce ideas off of each other and figure out, what should we do next? Should we, maybe turn this thing back? Should we just sell it? Maybe we, instead of taking 7 tenants, we just take 4 and see if that's better, right? Like navigating the flaws of our original business plan, I found a lot more comfort, being able to talk about it with my other club members versus like if it was just me in this shithole trying to figure out like how to get out of it, right? So I think like that's a really valuable part of the experience.
Yeah.
And then going back to initially, right? Like how do you decide what club you want to join or who you want to work with? I think really evaluating the operator's ability to talk about the ugly is really important. At least for me personally as an investor, when I ask people, hey, what do you possibly imagine going wrong with this project that we're gonna do? And they're like, oh, I've never lost investors any money. This will do well for sure. Those are major red flags to me.
Red flags.
Like this is not gonna work out. We're not the same type of person. Versus if they were just really candid, like, hey, I think the risks are X, Y, Z. I think, we should develop these kinds of risk mitigation plans. If co-living doesn't work out, we still have a plan B where we can convert it back, or we could do this other thing or whatever, right? Being able to really talk about those scenarios up front in an extremely logical way, that means a lot to me as an investor, and those are the people that I want to partner with.
I love it. It's funny because I have a good friend of mine that we're going to have on stage at GridCon. He has 150 co-living units that he manages, right? Or I should say 150 tenants, right? And many of the properties he owns himself, and he loves them. And they're all here based in our Northern Virginia area. Which is an affluent market. And so he's found the exact avatar who is perfect and the exact home that fits that avatar and the right tech tool in order to manage those tenants. And one of the ideas I had was, I was like, man, we should launch a club that's just specific to doing like 1 or 2 of these, because I have an operator who's just crushed the game and loves it, right? You have to love that kind of business. And when I was unpacking a little bit about his story, he likes dealing with all of these executives that are here for some time and getting to know their story and while they're here and like what they're doing. I was like, yeah, that wouldn't be fun for me, right? Like, I don't have time for that. But he loves it. And I'm like, okay, well, cool. If we ever do a club specific to that, with that thesis, I know that he's the person I'm going to bring in as my board of directors to help us manage those assets, because that's an important component of it. He also knows how to retrofit the houses, which ones are the best houses to retrofit. He's like, I can look at the floor plan and tell you exactly how to maximize your money based on the floor plans that are common here in our Northern Virginia market, right? So if you need some advice, I can connect you with him as well, right? I'm sure did you do it in San Francisco or did you do it in a different market?
We did it in Texas, but to your point exactly, right? I think it's so important to find partners that have complementary skill sets as you and a different wealth of knowledge, right? Like, I'm a co-living noob. Like, I love the strategy. I want to get exposure to it. I want to figure out how to do it. But if I were to learn that from scratch, it's like good luck, right? Like I'd still be trying to figure it out 3 years from now versus I want to get a head start on it. So partnering with an expert, people that have, gone through the good, bad, and ugly, right? Then I can build off of their experiences to really jumpstart my journey in a different vehicle and a different strategy.
Do you know Andrew Lamb by any chance?
Yep.
Yeah. Okay. Yeah, he does, I guess, a lot of in Vacaville, right? Cowville, Vacaville, in your neck of the woods. I guess he does a lot of sober living properties out in that market. Has he established a club with you guys?
He has not yet.
Okay. Okay. He should.
He
He
should,
def-
yes.
yeah, he definitely should. He ran a grid location for many years out that way, and then he kind of went into this niche of sober living homes and never looked back. He's like, dude, this is what I'm doing, and I haven't talked to him in some time, but I see a lot of what he's doing online. I'm like, okay, sounds like Andrew's doing well with his niche, right? Love it. I'll put you guys in touch. He needs to do.
Love it. Let's do
He
it.
needs to set up a club for sure. Okay, so you've got 2,000 clubs you've seen out there. You guys have raised, 400 million on the platform. What's next? Like, what do you like? What do you continue to build? What do we need to know? How can we help you within the grid community to get it out there? There's two reasons why I love the club idea. Before you answer that question, there's two reasons, right? Reason number one is I think it's an excellent way for people to come in and learn the game, right? I think it's an excellent way, especially if there's somebody that's running the club that has expertise. There's no better way to learn than by actually like doing it and having the discussions and looking at, underwriting the deal and hearing the thinking of the operator that's there that's had experience doing it. I think it's gold. And the second thing is it especially for a community like ours, it gets people in the game at a dollar figure that's like not earth shattering. Like they don't have to put in hundreds of thousands of dollars, right? Like there's clubs out there that probably have $5,000 or $6,000 minimums, I would imagine, and people can get involved in something like that and just start learning the game that way. And I think I'm a big fan of helping people learn the game that we're playing, which is why we call this podcast the income flip, right? How can you create more highly leveraged income in your life versus all of the active income that you've got? Like we want to convert that active income to more highly leveraged, aka passive income. Don't like the word passive, but highly leveraged income that pays for your life. And I'm like, what better vehicle than setting up a club to help our people understand how to learn this game, right? So that was like a dissertation in front of the question that I asked you. But the question that I originally asked you was, what's next? Like, where do you guys want to take this?
Yeah, I mean, I'm a big believer in education, right? And that is definitely a part of the DNA of fractional and investment clubs as a whole. And one of the phrases that Pace has actually coined for fractional is learn and earn, which I love. Because exactly what you said, Rob, right? Traditionally, you need a lot of money to go, invest in a syndication or a fund. That is not a normal dollar amount that the everyday investor, has access to. And there are a lot of, barriers, right? Whether it's lack of education, funds, all of those things. So we really want to break that down with the investment club by having a lower minimum investment amount and to, creating this light level of active participation where you can essentially be the board of director, right, of a club, work with a really trusted and experienced operator and understand their process and their logic without you having to go to the property and fix the toilet and deal with the day-to-day stuff, which not everyone has the capacity to do so, right? So really breaking down that barrier in every aspect of the way and truly elevating this learning and earning model, that's where we want to go as a whole with the investment club strategy. And something that I'm really excited about is, naturally people have started creating fractional investment clubs for strategies outside of real estate as well, which I find, super, super exciting. We obviously started out with real estate because there was a huge problem in this market and a lot of demand. But naturally, as entrepreneurs, especially real estate operators, people are interested in other things too. So starting from, late last year, we had operators who decided that they wanted to go buy laundromats together, and they started a laundromat club. There's
That's
another
cool.
one where, like this lady Tracy, she loved Warren Buffett's See's Candy model and all of that, so she built a candy store club where they're buying a bunch of candy stores, and they're gonna roll it up and sell it to PE. And I'm like, I never would have thought of that. Like, that is so crazy fun. So witnessing all of that has been just really, really motivating for me as the founder. Is like, wow, I get to support all these people's dreams and visions and see them bring their super fans and their audience into part of that ownership experience too. So that's another a major, major milestone that we're really excited that kind of got unlocked naturally. So want to expand that new vertical for Fractional as a new chapter as well.
It's interesting. As you say that, by the way, that was like one of the first thoughts I had. I was like, wow, there's so many different avenues that one can take when it comes to leveraging your platform. And what I see is that Fractional is also, and maybe this is the original idea, there was like an original core idea that you had in here around this. I really see Fractional as a community where club leaders can learn from other club leaders about these kind of ideas, right? It's almost, it opens somebody's mind as to what's possible. Because often we're just in these lanes, just looking at what we do. But then when you see somebody else setting up a club for laundromats and or doing something with See's Candies, or not See's Candies specifically, but like candy stores and rolling them up to sell the PE, you're like, you're only limited at that point by your creativity and your connections, right? Have you
100%.
guys thought of yourselves as like one big community that way? Or no?
That's been top of mind. It's definitely been something that I've wanted to create a space really for operators to do thought leadership with each other, right? Like, exactly to your point. Right now we do it more casually, like our friend Brandon Brenham, right? Like, clearly crushing it with every aspect of storytelling, building trust, and getting people so motivated and excited to elevate each other. And when I see Brandon's success, like, I can't help but get excited to tell everyone else that's a club leader, like, oh my gosh, you guys need to go see what Brandon did, because that is a winning formula. Like, take what's clearly working and implement it in your own flavor and how you want to run your business, right? So
Yeah.
yeah, I think there's so much like knowledge sharing and trading of notes and building on top of each other, where, yeah, certainly, we want to create a space for people to create better communities within what they're doing, and then also open their minds and collaborate with each other too, right? I think a diversification of thought is always something that's going to help everyone up level each other.
Yeah, I love that. I see that, right? Like, within Grid, we have communities that are all over the country, and they are little masterminds essentially. Like, the leaders are masterminding with each other every single week about how they're leveraging their community for deal flow, attraction flow, listings, buyers, like whatever have you, whatever they want, right? Like whatever business they have. And so I can see something similar with Fractional, but it's great because you have the ability to really penetrate all of these different communities throughout the country and be the glue for all of them, right? It's cool. You guys have something really, really special, Stella. Like, and I know you know that, right? But I'm just telling you from watching from afar and seeing it and being part of Brandon's club and launching our own club at GridCon, it's special. It just really is special. So sky's the limit for you. And I see a very big future, right? So how else, how can I serve you? How can I help you as you, whether it's with introductions or somebody listening right now that's probably has an inkling of wanting to start a club, right? What's the best way to get in touch with you guys? Who would you like to get connected to? Let's just kind of put it out to the universe and see what comes back to you.
Yeah, I mean, it definitely means a lot that you see the vision and you love what we're doing. And I also think it takes, special people that believe in community. And I know that is, a core piece of your DNA and why you built Grid, right? Is, we go farther together when we've got a family of people who all strive to be bigger than what they are right now. And that's how you win in the long run, right? And that is, your philosophy, it's Grid's philosophy. And that's why, there's so many parallels and why, we're so excited about all the win-wins that we're going to make together as a partnership. So yes, for anyone that's listening, right, if you are an operator and you're looking to unlock that new level of scale where, you want to raise money, you want to go get after bigger deals, more deals, and you've got people in your network that, traditionally have been left in the dust when it comes to building wealth in real estate or business acquisitions, whatever you're working on, right? Recognize that you are now that key for your people to unlock this way of building generational wealth with you. I think that's huge, and we would love to be a part of that journey and really streamlining that capital raising process for you, and truly unlocking a new world for people around you as well.
I just had this thought. I remember Dave Ramsey said every time he shipped a book out, into the world, he never saw it as a book, right? He was helping people get out of debt. He was actually shipping hope, right? He was sending out hope into the world. And so his Total Money Makeover, he didn't look at them as books. He's sending out hope. When I think about what you've done with Fractional, it's almost like you're shipping dreams. Like you're helping people fulfill these creative visions that they have in their mind about what they want to build. And, it's like dream making. So Stella, thank you for being part of the Income Flip podcast. Thank you for helping us build the castles and the dreams that we have in our mind about what's possible. And thank you for being a fan of building community. I really do believe that we all need other people to build the things that we want to build. Nobody succeeds alone, right? Everybody needs a mentor, a coach, somebody that they can aspire to be. And so it's why we built Grid. It's why we've got GridCon coming up June 1st, June 2nd, which Stella is going to be front and center on stage here in Tyson's Corner, Virginia. And so if you're listening to this, come out, check out Fractional in real time. Check out Stella in not online here or just listening to her. Meet her. She's super cool, an entrepreneur just like you, in the field, building things just like you. And Stella, what's the best way for people to get a hold of you?
Well, I am on Instagram a lot. My handle is Hella Stella, just to keep it California for everyone. So definitely follow along my journey. I love to build in public, would love to connect, and definitely come to GridCon, see me in the flesh. I think the best connections are made in person. So I'm really excited to meet everyone and connect on a really deeper level and go build some dreams together.
Yeah, let's do it. And by the way, okay, I just have to ask you one final question because I love Hella Stella. It's very cool. Tell us something about you that is kind of personal, right? Not too personal, but you know what I'm saying, right? Something that we should probably know to cement a connection with you, Stella.
Ooh, that's a really good one. Something really personal.
Something you love to do, something you love to eat, just whatever comes to mind.
Yeah, well, something that's non-work related at all. But I actually I think there are some parallels that come into the professional world too. But I have really embraced the idea of doing new things and finding happiness in the unexpected, and how that brings freshness and creativity, and honestly feeling really blessed that I can't predict everything in life. From a non-work related perspective, I actually have no groceries in my fridge at all. I like to actually, go walk to Trader Joe's and, see what my mood is and pick out, whatever I'm craving for that day, and making dinner from scratch rather than like meal
Living
prepping
dangerously.
or having stuff in the fridge. But, taking that from a professional context too, I used to get really intimidated when things that were unplanned or a challenge or something that wasn't so good came my way. Like I felt this like physical drop in my heart where I'm like, oh crap, like I have to go deal with this again. Like now my day's ruined and all that. And I've had a major shift in mindset from this term called amor fati. It's really about loving life in every sense of the way possible, especially the challenges and the unpredictable, because that's actually what keeps life interesting. And now I feel really blessed that, every day is so different than yesterday. And that's what keeps my life really fun. And, viewing the challenges and the unexpected as like, hey, that's how my life is spicy, and I get to work on myself and work on a new problem area every day. Whether it's deciding what I'm going to make for dinner or dealing with something from work, that, positivity and that optimism and seeing things in a different color, I think it, really shifts your perspective in how you treat yourself and how you treat the world.
And with that, Stella Han from Fractional. Again, thanks so much for being part of our income flip journey. Stella, thanks so much. Appreciate it.
Thanks for having me.